Welcome back to FreightWaves Now on this Thursday morning. We've got our FreightWaves President George Abernathy joining us this morning to talk all about what's going on with the Transplace deal in Uber Freight. George, welcome to FreightWaves. FreightWaves Now.
Good morning, guys. Just another slow news day in the world of logistics and transportation, huh?
Oh,
I know. We were coming on air, and about 15 minutes before, I got kind of the confirmed news, worked on getting up on the website, and here we are. Uber Freight and Transplace, $2.25 billion. You were once president of Transplace. What's your hot freight opinion about this deal?
The hot take is it makes so much sense, Kevin. In our industry, and I like the way that John Paul Hampstead likes to talk about creative and bold merger and acquisitions. And when you look at this, it makes so much sense that you put together these two pieces, the businesses that are very distinct from one another, but the synergies are going to be significant. And I think it's also compelling, Kevin, that about a year ago, the Greenbrier put $500 million into Uber. Two board seats came from that in Michael Weiss and Jill Raker. And that relationship, back to when I was to your point about being at Transplace, one of our private equity owners was Greenbrier. And so it's pretty clear that fondness for that Transplace business model that Greenbrier very well understood as they sold it back in 2017 to TPG is something that maintains some level of intensity and interest, and now has manifested itself in this really remarkable deal.
That is a great point, George. I hadn't even thought about that this morning. Is that $500 million investment that Greenbrier made last year in Uber, and we were all kind of wondering because Greenbrier usually more mature, maybe private equity growth, into profitability, talking about EBITDA, those core fundamentals. And then they made the $500 million investment into Uber Freight, and now we are seeing them purchase a company really based on EBITDA and profitability rather than outright growth.
I think, yeah, exactly. And I think that's going to be one of the really interesting parts to watch over the next couple of years in thinking about multiples and how these companies are looked at. In the world of Uber, very much a company looked at growth, at acceleration of revenues and looking at growth rates there. And Transplace, though dynamic, and what Frank McGuigan and his leadership has done over the recent time in the acquisitions that have been made, very much active in maintaining that leadership position. But they are a business that has been measured, and I'm sure in this deal was measured by EBIT, and that EBITDA versus earnings thing will be a fascinating piece to watch. But all things point to it that remarkable number, point to a very, very positive deal within this incredibly active logistics merger and acquisition market.
It is incredibly active right now. We're at the top of the market. We'll probably see more deals. There's probably ripple effects coming out of this deal with Uber and Transplace. So in your opinion, if we look at the low-hanging fruit of synergies and the really easily identifiable, whether it's technology or customer base, what's your opinion on what the top two or three really most logical synergies are that you see right from the start from this deal?
Well, I really see that what Transplace brings is that toolbox with so many capabilities, and you can measure that in the modes that they do, and immediately Uber becomes a genuine player in intermodal. There's Transplace's recent opening of a European office. Does that mean that Uber is going to get back into the European market? All of the things that Uber's done recently, talking about LTL, the practitioners, the people who are actually conducting all of that managed transportation that Transplace does as well, if not better than anybody out there. They certainly got paid for how good they are at it today. I think that those multiple modes that are being served and that really remarkable technology toolkit that Transplace has will match up incredibly well with what Uber's trying to do.
And if we look at, Uber Freight, of course, is their parent company is Uber. We all know Uber. We all know that they're a public company. What do you think Wall Street and the analysts, investors, what do you think their sentiment is of this deal?
It's a great question. What I would conjecture in that way, and I don't want to portray anything that what they may think, but in Transplace, they're getting a business whose stickiness with the customer base, because of the managed transportation dominance of where their revenue comes from, whether that managed trans is US centric or North American centric, but their business is incredibly sticky. And I think that because of that, that this should be looked at as a very positive development for Uber to be bringing on that kind of business, as well as the management team that Frank McGuigan has constructed over the last 3-4 years, and pulling from both the best within the practitioners, within the vendors in the industry, from the broker perspective, and also pulling in some folks who are leading the managed trans group that came out of the shippers world. I think that also bodes very well for what outside folks are going to think about this deal.
I do too. It's going to be very interesting going forward in the next few quarters and seeing Uber report, breaking out Uber Freight, and seeing pretty sizable quarterly losses, probably narrow down quite a bit, maybe even turn positive very soon.
It's entirely possible, and I think it's really fascinating, Kevin, that we've recently reported. I had the opportunity to do a couple of interviews to talk about the XPO GXO. Dividing itself up and operating as two separate businesses. I think it's August 2nd that GXO is going to be out there. And that, in that particular circumstance, makes total sense. It really does. And what we're hearing from, Wall Street is that Wall Street's going to like that. Well, here we have these companies being brought together. And I think that Wall Street, again, it's conjecture here, but I think Wall Street's going to like what they're seeing and what they're going to see from the business model that Uber and Transplace have going forward. So I think it's a reflection on just how exciting this industry is right now, and wonderful news for both the Uber and the Transplace folks to be bringing this, what's now a juggernaut, together.
Yeah, that's an excellent point. Again, George, is the XPO GXO spinoff and the reception that Wall Street has given to that, with Brad Jacobs, of course. This should be really positive. It should help out. It will help out Uber stock, but it should be a very positive reception from Wall Street and analysts. I think it makes a lot of sense.
I think so, and in the again, combination of the services, I think that the cocktail that's being constructed really makes a lot of sense and provides for, the opportunity for predictability of what those earnings are going to be, and having there be some level of expectation. But remember though, Kevin, it all boils down to the ability to continue to grow. Mm-hmm. And what this is saying is that the Transplace team has done a remarkable job to get that kind of number, saying that they've done a great job of continuing to show year over year growth. And as long as that continues, everybody, including Wall Street, is going to be very happy.
I agree, and we will be keeping very close tabs on it. It'll be a great story going forward into the coming months and coming years. Thank you so much for joining us today to talk about the Uber Freight and Transplace deal.
Always good to see you guys. Take care. Thanks, Kevin.